What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Supermicro Computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, guys, SMCI stock here on Friday finished the day down about $115 a share, 11.84%. It has been a volatile few days here for this name. Let's take a look and get really contextual about this name, about levels to watch come Monday, as well as any bias that we can pull out of the data here from Friday here. Now, after hours, the stock is down about another 15.5 points. It's looking at about 2% to the downside, about 1.8% to be more exact. Listen, as always, after hours movement, we absolutely have to take it with a grain of salt. Why? Volume. Look at how low that volume is. If you guys have ever traded after hours, you know how easy it can be to push around stocks with not even that large of orders. Okay, it's actually scary sometimes. So take it with a grain of salt, whether it's in your favor or going against you in the after hours. So let's move on here and take a look at the 5-minute chart, looking at volume to be more specific, right? I'm always looking on the 5-minute for really obvious correlations in spikes in volume with really big moves in price. What that tells us is that, hey, potentially a bigger sample size of the market here agrees with this particular sentiment rather than this other particular sentiment. So if you take a look here, you can see late on Thursday, we saw that test of 1,000 faded off. Right off the open here on Friday, big upside move rejected basically off of 1,000. And if we look at the volume, what does the volume profile look like? You can see here that we did see relatively substantial volume on that, at least, second more fade candle. The rejection candle actually less so. But on this fade candle, we saw very substantial volume, but notice this here. It's a bottom wick, right? A tail on that candle, which tells me that a lot of that volume contributing to that candle was likely hitting the offer, okay? Which changes things, at least in my head, a little bit. But I got to be honest with you guys. Looking here, this is a very normal volume profile for the kind of volatility that we saw in this name on Friday. And aside from like this spike, which, we've already kind of discussed about, I think a lot of that was offer volume, buying volume, there's not really a ton of obvious correlation, except for maybe, you had a little bit of a spike on these two red candles, fine, not really to be unexpected. But I think to sit here and say, there's a very definitive bias, at least in terms of volume correlation to price, where the market is obviously agreeing with this move more so than this move. For me, I think it would be a force. So let's move on here to the 30-minute. This is where things start to get really good. Levels to watch as we head into Monday. Again, I'm only using the most popular indicators. Okay, we have the 200 period and the 50 period, and we're looking at them on very popular time frame charts. The 30-minute, which is this, and then we'll take a look at the 4-hour and the daily. Now, here on the 30-minute chart, from a bullish perspective, what am I looking at come Monday? Well, ideally, I'd like to see a reclaim here of the 200 period. It's about 2.8% away, but that 50 period is about 7.7% away, and honestly, given the volatility of this name, I would ideally, if I'm a bull, prefer to see a reclaim of both the 200 and the 50 period moving averages come Monday. All right, reclaim both of those, claim the 50 ideally as a support level, and take it from there. We gave up both of them here today, and I think, given the right catalyst or the right momentum, you could see both of them reclaimed in a single day. Now, bears, what you're really looking for, any retest of the 200-day, you'd prefer to see a hard fade downside, and bears would like to see both of these moving averages curl over to the downside and help to put a little bit more psychological pressure on the stock, at least, specifically here on the 30-minute. So let's move on now to the 4-hour chart. You guys can see that 50 period is extremely in play right now. We are basically right up against that thing. Literally we're talking less than 1%, which is almost nothing on this stock as of late. So this 4-hour chart gets really, really easy here. Bulls, what's the story? I want to see a hold of that 50 period as support. We're right up against it here in after hours. We tested it earlier today as a support, and we did hold that. And looking specifically at the 4-hour, remember, we're always looking at a number of different time frames to get the most contextual view of the story possible. Bulls, going to want to see a hold of that 50 period here on the 4-hour as a support. Just bounce hard away, get up through 900, get away from the 50 period. Bears, even more simple. Downside break through the 50 period, head down toward and through 8. Okay, now the most important chart of all, that's the daily. Why is it the most important? Because it's the most watched. Every institution, every hedge fund, and hopefully every retail trader and investor at least has the daily pulled up somewhere or has looked at it at some point. Now, that being the case, it tends to tell the most obvious story here. So looking here, actually, let me zoom out even a little bit more. Looking here, I mean, you tell me, right? What's the story? To me, it's relatively obvious. The name is so volatile that we have to include a couple or maybe 3 round numbers. The story here to me, the very obvious one, which is the one I want to pay attention to, is if I'm a bull, ideally don't give up 800 to the downside, hold it as support on any test. Ideally, in the very short term, reclaim 900. And in a little bit bigger picture, 1,000 is really the goal. Reclaim and close above 1,000 would be a beautiful scenario. Because I know a lot of bulls are still looking at 1,000, 1,100, 1,200 as potential targets. Okay, and that starts with $1,000. That's a huge, huge psychological level. Now, bears. A few things. Do not let up on 1,000. Obviously, don't give up 1,000. That's priority number 1 in the macro. 900 in the more near term, ideally stay below 9. Continue to respect that as a resistance. And to the downside, a break downside through 8, head down towards 7 would be a beautiful scenario if you're bearish right now on SMCI. Now, implied volatility, for those of you who are looking at options or just interested in the stability of the stock, listen, the higher that goes, the higher the potential of IV crush for options holders, those who purchased options and are now holding them. Okay, the higher IV goes in relation to the recent past, the more, I like to describe it as kind of insecure the options buyers are. They're pricing in more volatility, right? I mean, that's literally where implied volatility comes from, the volatility being priced in to the different strike price options contracts. The lower IV goes, that will, squeeze some value out of the contracts, but the lower IV goes, typically the more favorable conditions are for options buyers, and the more stable at the current price levels the options traders are seeing the stock. Okay, so we're currently at about 106%, which is a little bit high compared to the recent past. Just understand that. Now, the bias. I know a lot of you are interested in this. We have about 600,000 total contracts traded here on Friday. That's a pretty good sample size. 320,000 of those were calls, and about 279,500 of those were puts. So listen, not an overwhelmingly lopsided ratio, but we are seeing a bit of a call bias here on Friday. Okay, now the short-term speculators, right? The short-term gambly style, short-dated, out-of-the-money contracts, right? The 0 to 20 delta range. On average, it's going to be pretty short-term expirations. Relatively undecided. Look at this, 172,000 calls and 167,000 puts. So those short-term speculators are kind of at battle right now. They're pretty undecided. All right, you get deeper in the money, and it starts to lean a little bit more to the call side here. And interestingly, even if it's a little close on some of these delta ranges, it does lean to the call side on every single delta range. That's going to be out of the money, at the money, and in the money. Short-term, mid-term sentiment, and longer-term sentiment, all of them leaning a little bit to the call side at least. As always, the options traders can of course be wrong. Make sure your risk is managed. If you got value out of this video, please subscribe to the channel. I have a goal. I'd like to hit 2,000 subs, I think within the next 7 days. But it's only going to happen with your guys' help. So if you appreciate me covering SMCI every single day, and you'd like to push the video to a few more eyeballs, hit the like button on the way out. Appreciate you guys, and I'll see you in the next one.